What's up, guys? Good morning. Hope we're doing well. Market's obviously open, but here we are ready to rock and roll. We are catching a nice trend here in the market so far. Starting to flatten out, very normal, very representative of what has been a range market as of late. You take a look up top here, and that flat top, I would argue, is essentially broken. But the market is now trying, somewhat struggling, to get to 22. Which is fine. We rejected just ahead of 21.9. That was the same region that caused us some trouble. I think it was yesterday. Yeah, yesterday. So we will we'll see if this turns into a continued bull trend. If we get a second leg, I'm going to do my best to catch that second leg. But if we end up going channel bound, range bound, and then fading backside, I'll do my best to catch that as well. What's up, guys? How we doing? Yeah, listen, hey, it's not often, but if something ever changes with the schedule, for one particular day, right? The schedule will remain the same, but if one particular day something changes, something happens in my morning, I got to delay things a little bit, I let you guys know in the free Discord. So it's the best place to check for updates. But we're here now, baby, ready to rock. John, Giovanni, Mio, Step, how we doing? Nia, Joseph, good morning, guys. Benny, 1J, what's up? Brandon, Tallahassee, good morning, guys. How we doing? Good to see you guys. All right, now as far as news, we had a Fed speaker starting at 9. At 12:30, Trump is signing some executive orders, and that's pretty much it. He'll be at a ceremony at 1. So, we'll keep an eye out. Well, I guess, we'll all keep an eye out at 12:30. I'll likely be off stream by then, but that's when Trump will be signing executive orders. And that's really, as far as scheduled news here, that's it today. Now, yesterday, we were getting some unscheduled headlines, quite a few, and it was moving things. But we got to keep an eye out for that every day. So nothing is different in that regard. But as far as scheduled, that's about it. Again, Fed speaker started at 9, pretty much finished up here now, and Trump executive orders 12:30 Central. So right now, as we watch this market, again, this is a 5-minute chart here. We might as well look at both, right? 2-minute top right, 5-minute chart top left, daily on the bottom there. Clearly, the market has entered a channel after a bull leg. And I would call that you could call it one bull leg, you could call it 3 smaller bull legs. But we got one big bull leg. So now the question is, when you enter kind of a flag, a lot of people would call it like this. The big question becomes, because it's not going to stay a trading range all day. Are we going to fade more aggressively downside, or are we going to get a second leg higher? Now, when I say it's not going to stay a trading range all day, we can get big trading range days. Like, for example, let's look at the 5-minute again down here. If we got this fading downside pulling on back to kind of where the open. I got to get my eyes adjusted to the day here. And we get a fade back downside here, then I would call that a trading range day. Okay. But since the open here, you get this one big push, and now we're in a range. And these ranges, again, a lot of times, it's basically 50-50. We can trade inside of the range. Like if we look at the 2-minute, clearly this is a relatively tradable range, but you have a flat bottom here, which is not great. Kind of a wedge descending resistance point. So I'm going to keep an eye on that descending resistance point. But again, a lot of people are going to argue this is a flag. And flags in ranges should not be bought. Okay, on trend days, they can be bought with basically all the confidence in the world. Just put a stop below the curl and see if the trend continues. But we're not in a trend market, right? I mean, you look at, again, context is the name of the game here. This is still ranging. It's trying to break out into a bull trend market. If we can get above, well above this flat top we did have at 21,450, 21,550, get above 22, and then see if it's off to the races into a trend market, which would be very nice. But for now, we got to keep an eye on that range and not trust breakouts, at least with too much confidence. Bumble, good morning. What's up, Marshall? How we doing? Good to see you. Gains up 568 on the 25K eval. Good work. Hindmost. Okay, so Hindmost is asking about Take Profit Trader, the experiences. So listen, Take Profit Trader, I mean, obviously it's on screen as we speak. I like Take Profit Trader a lot. Okay, the daily payouts are very nice. They're very smooth. However, in recent, like the last month or two, maybe 2 months, Take Profit has become, I'm not sure on the data on this, but I believe they're claiming to be the fastest growing, and they're not just saying that, prop firm in the space as of right now, and I would bet that that's probably true, and they're having a really hard time keeping up with customer support. That's just the reality. But all prop firms basically are. I mean, Apex is not, it's not like they're getting back to you in 2 minutes, which would be nice, but that's not the reality here in the prop space yet. They're all trying to catch up. Apex has said, I received an email from Apex as well, that they sent to all of us, and they said, hey, we know the customer support is not what it needs to be. We're working on it. We're trying to hire. It's been a huge focus, and we're really trying to get that better. So as far as I know, Take Profit and Apex trying to beef up the customer support is like priority number 2. Priority number 1 is probably to grow their business. Priority number 2 is to get their support going. So yes, the support is not fantastic. However, we shouldn't have support issues all the time. Once you get your support problem figured out, it's pretty smooth sailing with Take Profit in my experience. I have never once had an issue with payouts from them. As soon as they're approved, which can take anywhere from a few hours to a couple of days, depending on when you request it and how busy they are. As soon as it's approved, you press proceed and it's in your account in literally like 10 seconds. No exaggeration. So that's my experience with them. They're a great firm. They're behind on customer support, and I have had a similar experience, by the way, with the customer support. It's not like I'm getting, as far as I know, special treatment from the customer support. So I get it. It's kind of slow. However, I still think it's one of the best options out there. Yeah, James, appreciate you, brother. Yesterday turned into an interesting day for sure. Yeah, TC, I'm curious. I've been curious about Bull and Ox. My next stop, because I'm making my rounds, man. Right now I'm running Apex and Take Profit. My next stop is Tradeify. But Bull and Ox has had my attention as well. I feel like Bull and Ox is like that firm that doesn't really do much marketing. They just kind of seem to be a pretty damn good firm who doesn't really yell too loud. However, that being the case, I don't know much about it because of that reason. So I'm curious if anyone has experiences they can share with Bull and Ox, because maybe that'll be my 4th stop. Man, there's so many options. My funded futures, there's a lot of options, but you can only make your rounds so quick. But I started with what seems to be my 2 favorite, Apex and Take Profit. But again, scaling horizontally, we're going to have to make pit stops all around the industry. All right, so you can see that 5-minute 20 EMA is kind of coming up right underneath this channel. Again, the channel on the 2-minute is very, very clear. And then you have that 5-minute 20 EMA, which of course psychologically is going to be watched relatively heavily. So, if we can actually get a breakout, I mean, there's 2 minutes and 18 seconds left on this 5-minute bar. If we can get a break downside and a nice clean close out of this bear bar, well, out of a couple of bear bars, honestly, I would not be against getting short. However, contextually speaking, we have to understand that this is turning into now a range, 100% a range day, and the range is not very wide. I mean, this is a little deceiving here. Again, market opened. So the range on the day, we're looking at 100 points. Less than 100 points. Yeah, so I gotta tell you, I'm kind of thinking more buy low, sell high scalping mentality until we see a break one way or the other outside of this range. In which case, if I were in a trade, I'd cut or take profit and move to more of a swing mentality. Listen, this is, if you guys take one thing away from this stream, aside from going as big as you possibly fucking can, if you take one thing away from this stream as far as the charts, as far as trading, price action, context is what I want you to take away, because context is everything. And here we are getting a test of that that opening low, getting close at least. We'll see if we can break downside. But it's not about the setup, okay? It's about the setup plus arguably the more important factor, which is context on the day. Meaning, what does that mean, right? What's the market doing lately? Markets have inertia, right? They are resistant to change. They don't want to change until they're forced to. So if it's a range market, taking big bets on huge breakouts probably doesn't make sense. If it's a trend market, selling high, assuming it's going to pull back because, oh, it's already up 2% on the day, really, really bad idea. Because it can go to 7%, and we've seen that here live. Yeah, Scooby, Tradeify is actually my next stop here. I've heard good things about Tradeify, so I'll be hitting them for my next stop on the horizontal scaling journey. All right, this bear bar is a really big deal to me because if we see a nice close low, yeah, I'd sell the close and look. Basically risk the signal bar depending how big it is. Yeah, let's see if we can get something like that going. All right, I gotta adjust my sizing here and some of the accounts. Let's see. To size up a little bit when I have more and more padding. All right, we have 2 minutes and 45 seconds here left on this 5-minute bar. Again, let's see if we get a nice low close here. We've already tried to take out that opening low. All right. Yeah, I'm cool with that size across the board. When you're messing with your sizing on your copy trader, by the way, make sure you didn't mess one up. Because sometimes, like, if you use the scroll wheel to adjust the size, especially on the affordable indicators one, if you don't lock it in and you try to scroll back up, you can shoot that thing to like 30 micros, then you accidentally are trading 30 micros on like a 50K account, which obviously is going to be pretty damn big. Chris, good morning. Cindy, how we doing? All right. Cindy says, so you wait for a wedge breakout and then trade the direction of the breakout. No. When people... So this is a good question. I'm glad you brought this up. When people bring up like, so what is your strategy? Like you wait for this and then you do this. No, you know, the more you guys have been watching, you kind of get what I mean. It's not really that simple. Again, I preach constantly. It's not about one setup. It's about having multiple ideas, understand that they're all going to look different every time because every day the chart is different. That's what makes the puzzle kind of difficult, right? And you have to piece it together with the context of the day and the overall market inertia lately. So Cindy's question was, do you wait for a breakout and then trade the direction of the breakout? That would be like a 15-minute opening range breakout strategy, and that's great. That's fine in a trend market. In a range market, it doesn't work. Obviously, it reverses. Buy high, sell low is extremely important, that mentality in a range market, which we are currently in. So to just say, I'm just gonna buy the 15-minute opening range breakout every day and make a living, it's like, you're gonna get burned. It's not, like, it sounds like a smart thing, but it's a really dumb thing because you're completely ignoring the market inertia. Again, it can work great for 4 days in a trend market, and then you spend 6 weeks in a range market wondering why it doesn't work anymore because you're completely missing the context. Everyone else is seeing that it's a range market and you're still trying to trade breakouts, which probability, by the way, of succeeding has completely collapsed because we're in a range market. So it's always context. Very important. So I'm watching this bar here. Let's see if we can hold above that 520 and keep enough room inside of this little range. We still have that just brutal descending support kind of in the way. So listen, you know, a lot of you guys are past the point and you understand this, but the biggest thing, the biggest jump you can make today in your trading by far, and I promise you this is true, is you need to stop looking for, hey, like, what's the setup that's going to make this a career? Because, like, think about this logically. If there was one setup that could make your career, institutions are 70 to 80% of the volume. So when you're buying that setup or selling that setup, who's on the other side? It's most likely an institution. Now, if every time they take that trade, they're losing, do you really think in the next, 7 years from now, you're still going to be trading that one trade and it's still going to be working? They would have stopped taking that trade 6 years and 9 months ago. So it's not about a setup. It's about, you have to understand the context of the market and then find setups that fit inside of the context that for you have given you edge in the past. Okay, so if you're looking for like that one setup, stop doing so. Start doing things that make sense to you. And what I mean by that is like everything that I'm always looking at, okay? Like yesterday in yesterday's video recap, I was talking a lot about that opening range that we saw. And we were seeing, really no follow through, bars closing inside of wick lows, bars closing inside of previous bars opens. And it was just, there really wasn't a lot of definitive, decisive nature to the move. So taking a trade in there, it didn't make sense for me. Now, what makes sense for me might not make sense to you and vice versa. But you got to find for you, hey, like what is contextual for the day and what makes sense. And I know that sounds really vague. I get it. But that's the truth here. So at risk of sounding vague, I'd rather tell you the truth than just sit here and lie to your ass and sound really like smart, and then you find out that I'm just an idiot because I'm telling you to trade one setup. That's not going to work. Obviously. This is a very complex puzzle. There's context. And also, stop looking for certainties. You got to play the probabilities. This is a game of 60-40. Or somewhere in that ballpark, depending on your reward or risk. This trading's a weighted coin flip. That's it. However, if someone walked up to you in public and said, hey, I've got a coin here. It's weighted. 60% chance it lands on tails, 40% chance it lands on heads. If it lands on tails, I give you $1. If it lands on heads, you give me $1. You want to play? And you'd be like, what is wrong with this guy? Like, yeah, I'll stand there and flip that thing as fast as I can and play for a year straight. And you would make tons of money. Right? That's a good thing. That's called statistical edge. That's what we're doing here. Think of it exactly like that, because that is what we're doing here. Obviously, the numbers shift a little bit depending on reward or risk, but that's the game. This is not a game of this setup wins 98% of the time. That's fucking stupid. It doesn't work. If that was real, the institution, Goldman Sachs, would have stopped taking the trade 20 years ago. Because every time they would just lose. What's up, Bruce? Good morning. All right, now we are testing that little descending resistance here. I got to see if that holds or if that breaks. That will determine my decision here. There you can see we're getting some interest there out of the bears. Right now, understand the bears they're trying to find any reason at all to sell, and this here is a reason for them. Range market, right? This is the whole range of the day right here. They're just trying to find any reason to sell high. What's high? Well, probably at the descending resistance. Now, if the bulls can push it through, that changes the story here quite a bit. 3 minutes left here on this 5-minute bar. So, again here, a lot of people are going to look at this pre-market movement into the open and say, ooh, bull flag, right? That's what they're going to say. But you got to be really careful. We're in a range market. Bull flags will fail most of the time, in range markets, because you try to get the breakout and all the bears are like, whoa, who do you guys think you are? Sell that back down. I'm going to sell high. They're trying to scalp. When you do get a breakout and you break well above this previous high and it holds, then it's time to start thinking about, okay, well, is this thing actually breaking out? Are we going to see this range breakout maybe turn into a soft bull trend? But just blindly buying this as a bull flag, long term, you know, maybe it works today, maybe it doesn't, but long term, I think it's a bad trade. You got to think about that daily inertia, right? Range, range, range. I mean, you can just look at price here today. It's not like we, so far at least, have much of a catalyst to reasonably drive us up out of there. Okay, so here comes the rollover here now of this 5-minute bar. 2-minute is seemingly losing some strength here. But we'll see. I mean, this 5-minute just closed kind of sloppy. Yeah, back down into the range. I gotta tell you, on a daily today, I'm more open to just completely ignoring the 5-minute 20. Much more so than normal. As we've been around it, we haven't really shown a ton of respect. The range is relatively tight. So that's gonna be smack dab in the middle. I think oftentimes you end up seeing people kind of ignore it. At least slightly more than an average day. Javaz, good morning. Trev, how we doing? Ninja just passed second Apex eval. I just got to keep it a while. Hey, trade small, scale horizontally. Right? Everyone gets all excited when they pass the eval. You should be excited, but then they get in the funded account and they're like, all right, 10 minis, 5 minis. 1 mini on a 50K Apex account is too big, in my opinion. It forces you know what happens when you trade minis on most prop accounts? The drawdown isn't there, and you know that. So you end up saying, well, I don't want to risk too much of my drawdown on one trade. So what do? Your ego says, well, I can't size down because I have to trade at least 1 mini. No one's making money on micros. First of all, very wrong. Second of all, that like ego check. That's a weird thing to have an ego about, that you have to trade the mini, but so be it. So you're like, well, I need to trade a mini, but I can't risk this much. So I'm just going to keep 5-point stop loss, baby. And then I can trade 1 mini, multiple minis. A 5-point stop loss is really, really tight. And then you get chopped up. You lose 12 in a row. You say, wow, I'm really bad at trading. And you blow the account and you're gone. I don't want to see that. You know, if I traded with a 5-point stop, I'd get chopped up most of the time too. You gotta at least give yourself some room to be right, which means trade smaller. Even if you're scalping, 5-point stops when you're scalping, that's too tight on the Nasdaq. There you go, Ninja. No more than 3 micros max. There is a ton of money to be made in micros if you scale horizontally. People don't get it. It's like ego is blinding people from actually the whole goal, which is to make prop trading a profitable venture. But you trade the minis. Who cares? Nico, you should talk about risk capital versus account size on prop. How it gets people tripped up. Yeah, so risk capital is the drawdown, and account size is the marketing. That's it. That's it. They name the accounts what they name them to market them. It has nothing at all, nothing to do with the amount you're actually getting. What you're getting is the trailing drawdown. That's it. All right, we got 25 seconds here left on this 5-minute bar. I'm going to delete that so it doesn't distract us. I like to keep everything nice and clean. I don't know, man. This range is really tight, and the bulls are struggling here. This is tough. Tough to justify getting long here, especially when we're closing inside of that wick. I can't do that, obviously. Yeah, there's the close inside of that previous bar wick. That's nothing. Whole lot of nothing. Let's see how this bar becomes very important now. Again, I'm willing to ignore more or less the 5-minute 20 just because we've seen it tested. Market didn't really care. Volatility is just, the range here is 100 points on the day. Yeah, almost exactly 100 points on the day. So this being, I really think price action is just going to trump the 20 EMA, at least on a morning like this. So I'm willing to ignore it. Like if we get a reversal candle, I'd get short, little scalp, try to take out, at least get closer to the low. But usually I got to pay attention to that 5-minute 20. Yeah, Kings, you can trade all these on Sundays. However, the P&L will still be there on Monday. So it's really like your Monday P&L Sunday night. Yeah, good afternoon yesterday. It was interesting. Turned into a little scalp party. Giovanni, ATR right now, we're sitting at about 33, 30, 32, 33, and that's a 5-minute chart. So that's relatively low here. range. Which is why I'm trying to see if we can just get to an outskirt here. Really, right now, I have 4 ideas. If we get a nice break out of the range higher with a clean close on a bull bar, I'll buy the rollover. A nice break out of the range lower within reason. I'm more interested in that higher because to the downside, you could say, oh, well, now there's a descending support. So a break lower could still be in the way of the descending support. But a hard break lower, I'd be willing to sell the rollover. However, if we just see tests of the outskirts of this channel here, like this, right? I mean, this is the channel here. And then reversal confirmation bars, I want to fade back inside. Just scalps, little scalp mentality, back inside of the channel. Those are my 3, maybe 4 ideas right now. Now I just gotta wait for it to come. Dominic, good morning. Yeah, you know, Seeker, a lot of people, if you're brand new, the 25K Apex account is the best account. Trade one micro in it, man. 2 micros, whatever. Keep arguably 1, especially if you're going to use wider stops. And that doesn't mean that that's all you can ever make. You can scale. You can scale. Remember, they let you go to 20 fundeds. I mean, you could literally start averaging thousands of dollars a day trading 1 micro across 20 accounts. There's just no reason to trade the minis, man. Yeah, Joe, so this is a question I think a lot of people have about like the stop hunting thing. Here's the thing. So Joe's asking, you know, there's obviously stops up here, right? Here, at the high. Couldn't we just put a stop limit buy right ahead of those stops and try to get a run? Well, the problem with that, a lot of time, and sometimes, yeah, especially in a trend market, I will do that. In trend markets, that's a very common trade that I'll take. However, in range markets, the problem is you put this up here and maybe those stops are good for a 5 to 15 point push. However, oftentimes it's a range market, so the bears step in and short it right back down. It's like, what do you risk? Even if you risk 20 points, you're going to get stopped out a lot if you're looking to get 20 points, because you're probably only going to get a 5 to 15 point push if you're lucky off the stops. But all that relies because it's a range market, right? If it's a trend market, I think very reasonable setup. Very reasonable setup. In a range market, not so much. Yeah, you know, I don't know. The patience thing. I mean, the truth is at some point you just really get sick of losing. And the reason you're losing is because you're taking bad setups. You're just taking bad trades. You're taking trades that don't make sense. You're taking trades that aren't there. You're rushing it because you're focused on, I need to make money now. And kind of ironically, I suppose, the people who need to make money now almost never actually do. And the people who are like, you know what, I'm going to take a few weeks, gather data, trade small, see if I can make some money in the meantime, of course. But I'm going to trade small, I'm going to gather data, I'm going to see what works, I'm going to get a feel, I'm going to get comfortable, and then I'll scale. Is a much faster way to do it. And much more likely you actually get to the finish line here. And I'm watching this 5-minute bar here. See if we get a little reversal. By the way, there's not really a finish line, which is good. If there were, I probably would have lost interest. I don't like ceilings. Good morning, Derek. How we doing? No, you know, again, I'm somewhat willing. I don't want to, but I'm willing to ignore the 20 EMA. I should say, you know, I'm willing, but I wouldn't prefer that I would have to ignore it. I would love to get it closed like right here. Get short, risk this little curl. If I were going for a swing, I would risk this, but it's a range market. Swinging in range markets with wide stops, unless you're getting a breakout, it doesn't typically perform well, because, you know, you go down here and it's like, well, I haven't covered my risk even close. I'm like a third of the way to covering my risk, and then it reverses, and then you end up getting stopped. So I prefer to keep things relatively tight within reason in range markets. Got more of a scout mentality. You know, it's great to put on nice big swings and try to get 100, 200 points, but if it's not there, it's not there. I mean, the whole range in the day is 100 points so far, so trying to find some little scalps. Nothing really hitting yet. These are the micros, because I'm trading the micros across a bunch of accounts, so I just look at the micro charts, so I'm just ready to hit it. But like in Thinkorswim, I just have it defaulted to NQ. It's really similar. I don't think it matters too much, but you might as well look at the one you're trading, I suppose. All right, you guys see kind of an ugly little close. Closing at the midpoint, wick back from the 20 EMA. Gotta let the next candle work, unfortunately. Can't take bad trades just to entertain yourself. We're not here for fun. We should be having fun, but, you know, that's not priority number one. Just priority number two. I am a lot bigger now than I used to be on you should enjoy what you're doing. If you're not having fun trading the way you're trading, maybe trade a different way. If you're micro scalping and you're like, I hate this, maybe don't go all the way to swings, but maybe take some longer duration trades. You know, maybe put on some trades with much smaller size that need 80 points of risk. You're looking to get 100 points. Or if you're swing trading and you're like, I can't do this, try scalping. But Ryan, supply and demand. Supply and demand. I would need more context about what you're really talking about. I mean, because all this is really supply and demand. A lot of people like label certain strategies as certain things. It's like you could say that about anything on the chart. All of this is supply and demand. So like, where would a supply and demand? It sounds smart, but where is a supply and demand level? A double bottom, is that a demand level? I don't really understand what that means. Yeah, most terms are marketing, which is fine. That's good. Marketing's a great thing. I love marketing, but you know, I mean, you have to be able to separate it. All right, well, ATR here on the 5-minute chart, it's still holding up. I mean, it's at 30.31. But again, 100% a range marker right now. There's in my head right now, there's no reason at all to bet on breakouts until they actually come. Make it earn a breakout buy or sell. Don't just give the market something it doesn't deserve. Chris, good morning. How we doing? All right, we've got 40 seconds left here on this 5-minute bar. And, you know, I gotta say, I'm not totally against just betting on the range, risking the high of day, because that would change things anyway. Gotta see how this bar closes. Yeah, kind of just right at the previous bar's wick, maybe just above. Lunatic says, I broke a rule, made money today, but I broke a rule. Made 13,000. This is one of the worst things that can happen to somebody. Listen, if you break a rule, I've always said this, and it sounds harsh, but I do it because I don't want you to keep doing this. If you break a rule and make money, as humans, our instinct is to do it again because it worked. You should not feel good about breaking a rule and making money. The same way you should not feel bad about following your plan and losing money. It's unnatural. I get it. It's unnatural. You're going against kind of everything. But all right, there's a big old bar here. Let's see. This is an attempt at a breakout bar. You can see we pushed into high of day. Immediately got faded back down. Got stomped down by the bears. Whack-a-mole. Range markets are always like a big game of whack-a-mole, so let's see if we do get a nice clean close. You know, I'll have to think about getting long, but it'll really depend on how it looks, because this is a brutal range market. At least after the open. When you look here, when you think about it this way, that's the range since the open. I mean, you draw two little lines and it's like, oh, okay. We have not seen a single close outside of there. If we do see a close outside of there in the next 2 minutes and 10 seconds, I'd be interested. Risk is pretty damn high. I gotta be honest with you that it just fades right back in. But a big close outside of there does tell a story. So it's like, you know, risking the whole curl on that trade, this whole curl, I wouldn't be able to do. If I were to take it, I would just risk the signal bar And if we dive back into the channel, I'll just manage. Well, again, probably at the signal bar. But you can see we're getting stomped down already. A minute 40 left here on this 5 minute. Let's see how it ends up. Nah, Andrew, nope. Any prop firm trader who's trading like not a live account, which is almost, most people, live accounts maybe are kind of overrated in the prop space. It's like, just take payouts and have your own live account if you want to do live. No, but anyone who's trading prop and is like, man, my stops are getting hunted. It's like, you don't understand the market. The market is very deep. These institutions are building massive positions, sometimes one contract at a time. Just very quick over the course of weeks. Massive, thousands and thousands of contracts. And you think they care about your 6 micros or even your 20 minis? They don't care. They care about big picture. Like for me, when I'm looking at stop hunting, I'm not looking for prop traders stops. I'm looking for everyone's stops. Where does everyone put it? At least most people. What's the highest probability spot for a lot of people and a lot of institutions to just cut it and move on? That's what I care about. Yeah, so you see, I mean, Dominic, exactly. So if you're like, it's really frustrating. I mean, if you're like, I'm just gonna trade the range breakout. It's like, okay, well, you got short here. That didn't work. You got long here. That hasn't worked, at least not yet. You probably got stopped out already. It is a range market. Market inertia matters way more than any setup. The setup has to match the market inertia. It boggles my mind that, like, people in positions of seemingly like power, I mean, I don't know. It seems like everyone's talking about this opening range setup, like everybody. I don't even know where everyone's getting this from, but you need inertia. Yeah, and listen, I don't want this to come off the wrong way. Like, Hippo, the opening range trade can be a beautiful trade. Like, if we really think about what it is, it's a price action trade. It's the exact kind of trade that I would take. In a trend market, in a trend market. If someone makes a video about the opening range and they mention like, oh, hey, by the way, when the market's in a range environment, the market inertia, or however they phrase it, doesn't matter. When the market's ranging, this isn't going to work very well. But in a trend market, hey, this has served me well. Respect, 100%. They're right. I mean, that's a great trade to put on. It does have edge. However, if someone's like opening range breakout, trade it every day, you'll make a living. You can quit your job. I mean, one of two scenarios is true. They're either just lying to your ass for easy clout, I suppose, I don't know, or they just don't understand the math of the market inertia, which is entirely possible. But with the context of, hey, by the way, in a range market, it doesn't work that well, totally fine. It's just, I think that gets left out a lot because I keep getting that question. It seems like that's getting left out. Devani says, when you say range market, you are referring to the daily chart where it's not really moving, it's sideways. That's your gauge, yes? It's a mix of looking at the daily chart. Okay, so looking at this, bottom of your screen, and understanding what's going on. Well, really, every attempt at a real breakout in either direction has gotten wicked back within reason. Range market. And what does that do? It's a self-fulfilling prophecy. Markets are resistant to change because people pick up on these things, institutions pick up on these things, and they start executing in a way that supports that theory. Self-fulfilling prophecy, it just gets more and more rangy until it breaks, finally, and then it turns into a trend. Okay, but when you get this, and you're watching candles all day, in addition to not only that, you look at a range, or I'm sorry, you look at the intraday action, and you're like, what did bulls do? Tried to break out, bought it right back up. What did bears do? Tried to break out, sold it right back down. That fundamentally changes probabilities of breakout trades. Really important to understand that. So I mean, don't get me wrong. Like I don't have a problem with trading. I mean, again, you guys see me trade what I guess you could call opening range breakouts all the time when the context is right. It's great when it's not a range market. But I mean, understanding the context of things. I mean, it's a higher level thing. So I mean, I guess can't really blame people if they haven't really dove into that yet. Yeah, Max, this is well, no, it's an EMA, it's an exponential moving average, and it's a 20 period, so it's 25-minute bars. The one on this chart. What's up, brother? How we doing? Well, ATR here on the 5-minute is still holding 30, 29.30. It doesn't look like it, but it is. It's not too bad, actually. What's up, Anthony? How we doing? Got 3 minutes left here on this 5-minute bar. What's up, Jet? Going well, brother. How you doing? There you go. Nice big dump off through the middle of the range. Now, listen, personal preference here, when we are in a very clear range like this, range market, I'm not really looking at this as like a super tradable range. I'm just adding those lines on there for context for you guys to see this and say, oh, okay, I see what we're talking about. The middle of said range is kind of tough to make decisions around. Because no one said that a trading range has to go top to bottom, top to bottom, top to bottom. It can go top to bottom, middle, bottom, middle, top, middle, top, middle, bottom. You know, right? So if we're going to trade this range, I would really prefer to just trade it on the outskirts. then the question becomes, well, okay, but then, you know, for example, had I ended up shorting here, it's kind of tough because this is different than a lot of other setups. You don't really have any kind of context of what to risk because you can't really risk a bar. There's no curl to risk. It's high of day. So the risk ends up being somewhat arbitrary, the stop. Okay, now, ideally, it would be somewhere between 1 and 2x the size of your reasonable expectation of a scalp back into the middle of the channel here. We are getting a big old bear bar, though, to the bottom of this range. All right, finally, here we go. Getting some action. Let's see what this does here. You guys see here, there's some bull resistance. They're stepping in to try to buy. All right, here we are getting the attempt at the breakout. This always comes in these little ranges. It always comes. So, again, this is why if you're going to scalp the little range, got to be relatively careful. I don't think it makes a lot of sense to go like 1 to 10 reward to risk. You know, but probability is good enough to go 1 to 2 if you want. If you want to do some averaging in, fine. But here we are getting a nice little attempt at a break. That is low of day, by the way. At least since the bell. So we've got 4 minutes left on this bar. So I'm very interested in this bar. I perhaps may end up selling the rollover if we get a nice low clean close. We still have 4 minutes. So before then, I will be back with coffee. One sec. And right back into the range. Range market. I mean, this stuff, it happens all the time. So I'm curious, let's see here. See if we get a little pullback here. A little extra, come on now. For 20 more seconds. I like entering with limit orders. In range markets like this, I prefer not to buy the market if I can help it. This thing's running away. Come on back. Give it a little extra here. All right, leave it for now. It's really interesting though, actually. We have not seen, I mean, if we look at this, we have not seen a single close. Once we set this range, again, this is a 5-minute chart, just for context. We have not seen a single close outside of the range. Which, I mean, like, it's not a coincidence, right? So once we get one, all of a sudden I become kind of interested in going outside of the range. New York open. I don't even think we saw a headline here, did we? At least not that came through on my end. Close that bull bar right at the previous bar's wick. Yeah, Jack, give Derek an answer. My opinion on this, Derek, is I don't necessarily think you have to have taken a payout in the first account, funded account, but I do think that you should have, you know, if you want to wait until you get a payout in the first account, that's a good rule before you start scaling horizontally. But if you have a couple of weeks of consistent profitability, even with some red days mixed in, it's fine. Then I think, you know, they're inexpensive enough where it can make sense in the business model to start scaling in. But I think an easy rule of thumb is, you know, maybe wait until you get a payout from the first account, then start scaling sideways or horizontally, sorry. Yeah, James, so on a day like today, you know, honestly, range days, they take a little bit more thinking, in my opinion. However, for me, I'm looking for a couple of things. Let's talk bullish side, and you can just mirror it to the bear side. So, on this close, we got the rollover, and we kind of saw like a 1 tick or 2 tick gap up on the open, and we pulled away. Had we seen a little bit of a red pullback into the body of this bar, because we're in a range, it's not continuation. I can be picky like that in a range. I would have just bought that and looked for a push up into at least the middle of the range, if not a little bit more. But really, an easy rule of thumb, if you want to think about it this way, is, okay, what's the size of the range more or less? So this one's about 100 points. Okay, it's about 100 points. So back to the middle is 50 points approximately. The middle is kind of equilibrium, right? I mean, that's, you look at today, that's clearly equilibrium right in the middle. At least the average of the whole day, not necessarily at this very moment. So what I'm thinking about is, well, in a lot of ways, you could argue that I could just buy below pretty much anything, risk half the size of the range for a 1-to-1 scalp. And probability on that over 1,000 trades is going to provide likely some edge. Now, you know, you could have done that here, you could have done that here, could have done that here, well, here and here, but most likely just here. I didn't, but I'm thinking about that now. But that's kind of an easy rule of thumb, because range days they're tough. They can be hard, especially early on, because it takes a little more thinking. But I think it's kind of the easiest way to think about it if you want to think about it that way. Yeah, Mason, with TFD, it wasn't an issue. It was just it doesn't fit into my copier, like the technical way that you use it. I was having to run dual copiers, and when I found the affordable indicators copier and I really liked it, it worked very, very well. It became very fast my favorite copier out there. And Joel at Affordable Indicators seems to be very receptive to adding things in. I'm hoping that they get a contract, a max position size kind of filter going in there soon. I like it a lot. And with TFD, I was having to run, because they have a partnership agreement with a particular copy trader, and I don't want to have to run two. It opens me up to too much risk of being distracted, of having to run all this different technology to the point where it just didn't make a lot of sense. But if they were able to get it integrated into my workflow, which is a lot of people's workflow, I'd be hitting it again right away. All right, we got 2.5 minutes left on this 5-minute bar. This is the first time of the day today. Well, aside from, I suppose, here, we saw the 5-minute get respected, 5-minute 20 EMA get respected to the upside and push. However, what we have not seen today is an outside test of the range and then a respect of the 5. Outside test of the range, respect to the 5, nope, went right through. Outside test, nope, went right through. Outside test, respect. So it would not surprise me if we get a bear bar closing outside of the range. And if we do, ideally below this wick, I would look to short that. One sec. All right. 1:10 left here on this 5-minute bar. Come on, Barrett, see if we can get an actual breakout going. Bulls are going to wick it right back up, aren't they? All right, Hindmost, we'll see you soon. I mean, right now, I really think the 5 minute, at least for me, is kind of telling the best story. The range seems to be collapsing a little bit, which is actually a good thing. If we can get this collapsing, maybe sacrifice a few 5 minute bars as dojis like we just kind of did, maybe we could get a downside break. In which case, I'd slap a short, risk the curl or the signal bar, depending on how big the signal bar is. Coming up into that 5 minute 20 EMA that got respected actually for the first time of the day after an outside test of the range. So let's see if that gets respected again. If it does, then things have started to change a little bit here. Yeah, Max, my two favorites are still Apex and Top 2, and Take Profit is a really, really good firm. I really like them. The one thing with Take Profit, just straight up, man, is they've been growing so fast that their customer service has not been able to keep up. So lately, the customer service has been a little bit slow. They're trying though. We have word from them that they are aware of that. They know it's not up to par, and they're trying to grow it. Same with Apex, by the way. It's been a huge focus for both of them to get the customer service up. But Take Profit's really cool because, you know, you can't go to 20 accounts. You can only go to 5, which is like, okay, fine. But the daily payouts is a really big deal. I mean, as soon as it's approved, you request the payout as soon as it's approved. You press one button and it's in your account instantly in like 10 seconds. That's been my experience, at least. Which is really nice. So I think ultimately the best, if you're going to only go with 2, the best first 2 mix, I think ultimately, you know, we're going to have to make rounds. Again, my next stop's TradeifY. Then I might hit Bullinox. We'll see. But for your first 2, I think it's always important to mix, diversify your risk. Like, you know, everything with one prop maybe isn't the best idea. Apex and Take Profit is great. I commonly will say I think Take Profit is, you know, arguably more advanced because you pay more up front. And if with Apex, it's like you can fail the eval for cheaper. But if you have a reasonable expectation you're going to pass the eval or the test, I think Take Profit's a great first pick. And then Apex or vice versa. If you're like a little bit newer, it's probably cheaper to learn with the Apex evals and then dive into Take Profit. But it's a great mix because Take Profit gives you the upfront revenue generation with daily payouts to kind of keep you afloat if you need that in the meantime. And then Apex, you can go to 20 accounts, which lets you scale big. So you can, you know, you end up maybe with 5 Take Profit Pros, 20 Apex PAs, and then you start making your rounds, maybe TradeifY, Bullinox, My Funded Futures, whatever. And as always, best deal always, use code BIG. B-I-G, baby. Jaykato, can you pass Take Profit in 1 day? No, you have to trade for 5 days and Take Profit, and no 1 day can be more than 50% of the total profit target. Mason, do you mean like you got the email where they requested more information about your trading? Is that what you mean? No, yeah, I didn't get that. I didn't get that. I think what they did is, I'm guessing now, but I think they filtered through and looked for whoever they thought, you know, whether you were or not. Again, but if you got the email, I think they were looking through and saying, okay, who is maybe trading in such a way that could end up gaming our system a little bit. And the way that I trade, I don't think they're too worried about. Which is, again, another argument for scaling horizontally, trading small per account and scaling horizontally is, I think, long-term, maybe you end up in better standing with the props because you're not trying to game the system by trading huge, just trying to take one payout and then blow the funded and move on. The long game, I think, is the better game. And it's not even that long, let's be honest. Like, even if you're scaling horizontally, you can scale pretty damn well in like a few weeks. All right, just waiting to see if we can break above this 5-minute 20 EMA. Otherwise, you know, the range, I mean, really what I'm watching here is this range. Those two lines have been a huge deal. We've yet to see it close outside of that since the open. So clearly this is a range-bound market. We already knew that coming into the day, though. So really no great reason to start betting on breakouts now. Yeah, Mason, I'd say that makes sense. I mean, again, I might get the email. Who knows? And if I do, I have everything recorded, so it won't be a big deal. I don't know. Do affiliates get special treatment? I don't know. It doesn't seem like I do, because when I've had support issues in the past, it takes just as long as everybody else. So I really don't think affiliates do, but maybe we do. And if so, like, I mean, don't hate the player, right? Damn straight, Superfly. Robbing those sons of bitches blind. Use code BIGBABY. 60 seconds out from the close of this 5-minute bar. If we do get a nice clean close, I think even though we are in the center of the channel here, since we got a rejection off that previous 5-minute 20 EMA, I would not be against getting long for a scalp. Just kind of maybe risking a reasonable curl. Maybe the previous bar is low and seeing if I can get a push up toward the top end of that channel. Yeah, I mean, Max, that's all they want, right? You have to understand, with all the changes going on with Apex, you should understand what their problem is. Their problem is people have been gaming the system and making millions a month, costing Apex more so millions a month by gaming their system, and that's a problem for their business. So we want them to fix that problem. Otherwise, it's unsustainable. Then we all stop making money through the prop firms, right? All right, so I'll get long there on that rollover. So there you go. And I'm going to go ahead and just keep the risk pretty damn tight. And I'll risk a point below that curl, and I'll pop that above there. And just see if we can get a nice little push toward a little closer to the top end of that channel. So risk here is about 27 points. So I'm looking for maybe 1-to-1, perhaps a little bit better. And I'm not necessarily looking for a push up outside of that channel. That would be kind of a silly expectation to have, at least for a trade like this, just a little scalp. So kind of minimum, I'd like to get 30 points. Put it there for now. Even that is a little higher than I necessarily need on this trade. So I'm currently holding 47 micros. This is always, I think this confuses people. It says 1. That's because this is just, you know, the way NinjaTrader displays it on the chart trader, it's just going to show the leader account. But like, for example, here, I mean, you can see very clearly that it's not 1. I'm holding 47. Of course, that's due to the copy trading. Well, ATR here on the 5-minute chart, by the way, currently at about 32, 33. So I feel pretty damn reasonable looking for kind of a minimum 30 points out of this trade. All right, here comes the rollover of this 5-minute bar. That's all right, closing around the midpoint. Not the strongest close we could have had out of the bulls, but it's all right. All right, risk on this trade, by the way, is small. Risk on this trade is 2,500 bucks. Yeah, I'm looking to get at least about 30 points. So you'll see if they fade this back into the low end of the channel. Oh, balls, you're killing me. It's actually really interesting. We still have not seen a single close of any 5-minute bar outside of this range. And that range was set by 850. I mean, just the definition of a range marker, right? Yep, just a little, momentum in the range. I think it's kind of a weird term, but yeah, more or less. I mean, we got a nice clean close out of the bulls. I don't go out of my way to enter trades in the middle of the range. But when we get to close like this, it's a scalp I got to put on. Not a swing, by the way. I'm looking to get maybe 30 points out of this trade. Just not even to the top end of this range here. But yeah, that is the trade. Since we are in a channel, it's more actually entered with a, I forget. I think I used a limit order. Yeah, listen, Benny, in a range like this especially, the probabilities suck a lot closer. They get closer. They're not exact, but they get closer to 50-50. It's no longer like 70-30. It's definitely not, well, I should say it's definitely not 70-30. It's no longer really even like 60-40. It's a little closer to 50-50. There are trades in there, but just because you and I are doing opposite things doesn't mean that one's going to be right, one's going to be wrong. We could both be wrong, we could both be right. It depends on management, of course. And time frame. Really, this trade for me, like if it does stop me, if we dip down and stop me out, what that does is it now gives me information like, okay, the channel definitely has changed, right? Because we didn't even, we got to the middle of the range and faded, right? So a stop, I mean, again, risk on this trade is small relatively. It's 2,500 bucks. And if it stops me, I gain information, so that's fine. Ramon, it's just based on experience and how things have, well, data essentially, how things have treated you in the past. There's no way in real time to look at a chart, which is different every single day, and run a quick calculation to be like, okay, what's probability? That doesn't exist. It's all an educated, essentially, guess, using your data as the backbone of that educated guess. There's a big difference between an educated guess on probability based on what you're seeing and what you've done in the past and what your data has looked like on certain setups. There's a big difference between doing that and just guessing. It's big difference. Yeah, this thing's kind of getting sucked to the 5-minute 20. We'll see how this continues to develop. Well, I mean, listen, ATR right now is still holding almost 30. I mean, it's at like 29 on a 5-minute chart. However, I mean, you look at these range bars lately, and they're tanking. The range of these bars is tanking. The last 5-minute bar had a range of 15 points. We've seen that a couple of times now. So ATR is likely, as these bigger bars near the end start to fall off, the ATR is likely to start coming down into the mid-20s, maybe even lower. We'll see how these next few bars continue to develop. And these last few days, it's been like the first trade of the day. Volatility. Actually, I'm sorry. It's like the first or second trade of the day. We always get at least, it seems like at least one trade on stream, even with not even like necessarily wide brackets. We enter and volatility just kind of dies. I mean, listen, that's okay. I mean, nothing for me on this, it was intended to be a scalp. I mean, I'm risking 27 points on the Nasdaq, which is not a lot. As far as, you know, expected trade duration, how long I expect it to take. But nothing's changed for me. I just got to let it work. See if we can kind of get a minimum of 30 points upside. Not a bad little push. All right, let's see how we act around the high 30s. Again, I like to leave in a market like this, like with tariff talk going on. I do like to leave my limits high. My take profit limits high, because sometimes we'll get, you know, Trump sends, all of a sudden I catch an extra 10, 20 points. But I'm not against placing it at 42.75 if I need to. So I'll just hover that in case. Clark, okay, real question. What is your most recommended option strategy? I made my first options trade selling a put this week. Listen, a great place to start is just running the wheel. A wonderful place to start. Then you can launch into spreads. If you feel like you have some kind of directional edge, you know, just regular, you know, credit spreads are a great place to start as far as spreads are concerned. Then you can launch into something a little bit more complex. Condors, butterflies. It's all very confusing at first, and then when you start to understand the Greeks and how options move and operate, it becomes relatively simple. Managing them is where things get a little bit complicated, like when do you manage early, when do you let them go to expiration, things like that. Risks, as far as on spreads, there are certain risks where if something comes and closes at a very particular level, like outside of strikes or in between strikes on certain spreads, you can get into a lot of trouble. So make sure you understand all the risks of every strategy you're running. But in the very beginning, I think the quickest way to launch into net sell option strategies is just run the wheel. It's the best way, the quickest way to just get some premium coming in, get a drip coming. Maybe, you know what, if you're in a position where you're like, I have a little bit of money, but like, I don't know, I need to, and maybe you have a cheap rent and you're like, I just want to pay my rent or get my car note going. Great place to try to start. But again, you can get hurt, so you got to make sure you understand the risks of the strategy you're running, and that would be a 6-hour video. So we're not going to do that here, but I think the net sell option strategy should be in everyone's playbook. It should be something everybody, I think, does, at least if trading is something that interests you enough to run multiple portfolios. But let's be honest, managing a net sell options portfolio takes about 10 minutes a day. It's not a big deal. So having something like this, or maybe you trade, maybe you trade small cap momentum pre-market, great. But that shouldn't really be all you do if you're really into trading. But if you're like, you know what, I don't really, trading's cool, it's interesting, but 15 minutes a day is enough for me at the screen. You're like, I don't really want to have to work at all. I just want to have kind of a pile of money that I manage my options portfolio with, and I live in a cabin in the woods and go out in the kayak or the canoe, or you go hiking every day. Then you probably could get away with just running that portfolio. But for someone who's really into trading, that's kind of like, it manages itself. Again, you go in 5, 10, 15 minutes a day, make any adjustments that you need to the spreads, and you're done. It's not that big of a deal. All right, 1 second here. All right. Well, this trade's taking its sweet time, huh? This volatility has kind of collapsed. Leave that there for now. ATR is now at 28, dipping, kind of just like we talked about. This is going to likely dip into the mid-20s unless volatility increases a lot here on the next couple of bars. What's up, Ash? Good work, brother. All right, bulls. Come on now, let's get some, oh goodness, let's get some volatility going. Well, kind of hanging out right in the middle of this big range here. Again, yet to get a single close all day. A single 5-minute bar close all day outside of this range here. ATR now down at about 27 on the 5-minute chart. Again, that's the average range in points of a 5-minute bar based on the last 10 5-minute bars. All right, now if we were to dip down and stop me, I'd be very interested to see if that just turns into a break of this range, which ultimately, to get volatility up would be the quickest way to do that. I mean, again, right now, as far as trade management, there is yet to be a scenario that, for me, makes mathematical sense to just cut it. It got kind of close on that last bar, but it's not there. Let's see if this cuts us. If it does, I become pretty interested in the bottom, the test down here, if we get it. I mean, again, right now it's a range market, so any outsized move, you're going to have the other side trying to step in at least. Well, this trade is just trying to hang on for dear life, huh? This is one of those trades that's like, man, I wasn't really... This was meant to be a scalp. This happened a couple of times in the last couple of days. Then one tick. Yeah, Jimmy, that makes a lot of sense. What you're saying exactly makes a lot of sense to do. However, since I entered kind of in the middle of the range, more just on that little continuation setup we had, I don't want to risk the entire half the range. Okay, because this trade, really, the risk on it was very small. On like a bigger swing lately, I'll risk $6,000, $7,000, $8,000, $9,000, $10,000. And risk on this was $2,500. So that'll stop us for a $2,500 loser. Again, just meant to be a scalp on that trade. It's one of those scalps that turns into like, man, the time investment in this play isn't even worth the risk. This was meant to be a bit quicker in either direction. However, when volatility dies, there's not really much opportunity cost because there's nothing else you'd really be putting on anyway. So, all right, guys, I am going to, it's about time. I am now freed. I am now going to hit lunch, come back, and see if we get some better volatility here this afternoon. You know, volatility itself, I don't want to complain. It's not awful. It could obviously be worse, but the channel here, the range of the day, seems to kind of be collapsing, and it's a lot of back and forth, which is, again, fine, but we're not even really backfilling the entire range anymore. So let's see if this ends up breaking. If we get a close, what I'm really watching for is if we end up getting a close outside of this range here. Again, this is, here, let's go back a little bit. This was the open, and we set that range early, and we have gotten tests, but we have yet to get a close outside of there at all. So we'll see if we get that here in the next maybe hour. All right. All right, guys. Hey, listen, use code BIG, Take Profit Trader, Apex, best deal always. And I will see you Monday morning for the regularly scheduled programming, 8:15 a.m. Central Time, Monday. I'll see you guys Monday. All right, have a great weekend. Rest up. Don't think too much about trading, but it'll be here on Monday. Nothing you can do, so don't have anxiety about not working. Rest up. Put yourself in a good position for Monday. All right, guys. See you soon.